So we've had Janet Yellen's speech here, and the market reaction rather confused to say the least. The dollar sprinting higher, then getting bashed to new lows locally before getting back into the range it started the day at. I think there are a couple of reasons for that. The first headlines coming out of it looked hawkish. She clearly wanted to talk up, or it seemed clear from the headlines that she wanted to talk up the likelihood of a Fed rate hike in one of the coming meetings. But as you read through the actual speech, those comments looked less hawkish, and we're still contingent on incoming data. And the market's still looking at this as if they do hike, it's about the next hike, maybe two out in the 18-month time frame. She echoed a lot of the comments of her former colleague at the San Francisco Fed, Williams, in terms of her talk about the longer-term natural interest rate being much lower, maybe couched a little bit less extremely than in his case. But that was something that I think caught the market and wanting to sell the dollars. All this talk about a very low funds rate in the future as well. She seems to still be, despite all of the seeming failures of Fed policy, to be quite impressed with monetary policy's ability to boost and support the economy. And it's clear that if the Fed sees the economy heading south, it's going to go back to the measures it's done before. Lower rates and more QE. She even talked about a simulation with $2 trillion of Fed asset purchases. However, I thought the one thing that may be getting the dollar back into the range was there was a mention of, in the model, wanting to keep the interest rate above zero or at zero and not into negative territory. That was the only mention of the interest rate and whether or not to do a negative interest rate. And she seemed to show that the Fed or the model preferred to have leaning more on the asset purchase and forward guidance side of things rather than a negative interest rate, and that would be more effective. So I think maybe the dollar might be somewhat supported and back in the range on that note. Finally, she did also echo comments from Fisher, Vice Chairman Fisher, and others in talking about the fiscal side of things. She relatively prominent, said it could support the economy and act as a counter-cyclical force. But she still regarded monetary policy as still being effective, and I think that is why we haven't seen, for example, a very strong spurt higher in the dollar. From here, though, we've seen an interesting test lower in the dollar. If the dollar rallies from here, we've got a very interesting bullish reversal for the dollar. As well, it's about risk appetite and whether they're confident the Fed knows what it's doing and whether they think that the Fed is going to be supporting markets as well. There was a mention of financial stability that I thought was quite interesting in the speech. I can't go into the specific context as I'd have to dig through the speech itself, but I thought it was a bit interesting. Some risks, talk of risk of financial stability if the zero rate is kept for too long. That can be an indirect reference to what the Fed is seeing in current markets today. So again, I think the dollar and risk appetite will move in opposite directions here, whatever happens next week. If risk appetite remains strong on the global liquidity theme, reach for yield, dollar should remain on the weak side. If markets are losing confidence and think they've overdone things, I think the dollar could be in for a very strong rally. I think if we are seeing a weaker dollar, I don't expect it to extend much longer. I do think further out, the potential for dollar strength is much greater than for dollar weakness.